What's up? And welcome to my first video. Uh, I'm gonna be starting a weekly market analysis video where I'm gonna cover stock market technical analysis and fundamental analysis. I'll be sharing some stock valuations, stocks that I believe are undervalued or fairly valued for this past week. Um, I'll be going over any portfolio updates that I have. I'll be going over my current trades, and I'll also go over my trade signal results from the past week or two. So a little bit about me. I run a stock market community called Market Victor. It's fairly new, and I'm trying to build it up. In this community, my goal is to help investors and traders become profitable, become more confident, and build their skill set up. So some of the stuff I offer a valuation database where I post every month. I update stock valuations for 30 to 40 stocks in the S&P. Um, and I give a technical outlook on them and I rate them fundamentally 1 to 3. Um, and all these stocks in this database are going to have a minimum of 2 out of 3 or 3 out of 3. If a stock goes below that fundamental rating to 1 out of 3, I remove them. The point of this database is like any stock you find in here will be good to add to your portfolio, a good option for you to feel confident to invest in for the next 1 to 5 years. Um, Also, other stuff I offer in my community, I I have a Discord server which I'm trying to grow and trying to encourage people to post their trades or questions or share some insights that they have or charts. Um, And another thing I offer in that Discord server are trade signals. I've developed my own buy and sell signals that are designed for swing trading. I'm mainly an option seller. Those are how I do most of my swing trades. And so the way I use my signals is on average, they are good for 2 weeks, up to 2 weeks, which means that the price that occurred on the buy signal price most of the time will not go below that buy signal price for 2 weeks. So, for example, if you're an option seller like me, the way I use them is when I see a buy signal and it meets the rest of my criteria on my trading checklist, I go ahead and I put a strike price, like zero point 0.2 delta, for example, with a 2 week expiry. And that gives me greater confidence that my trade will be profitable in these 2 weeks because of the buy signal. So I do post those, and I'll be going over the results of them to kind of build a reputation, kind of build a track record for them. Um, and so yeah, with that, I guess we'll just get started. So on my screen here, I have SPY. This is the SPY daily chart. Um, Always start with SPY before you do any kind of stock analysis, because whatever SPY does, the rest of the market, the rest of the stocks will follow. So I have this uptrend line drawn from the stock market interim bottom we had in October 2023. I have a couple of data points that touched here in October, the one in August of last year that we had, and most recently the one that we had in January, which did close below it intraday, or it opened below it intraday and closed above it. Um, as I'm sure you're all aware, on Friday we had a big sell-off. I'm sure you're all desensitized like me to it. We've had many of these, since Trump got elected. So we'll see what happens. This sell-off basically took the market from all-time highs down to this uptrend line in one day. Am I concerned about it? No, and I'll show you why. So I'll go ahead and turn on my moving averages that I track. So I have the 50 moving average in blue, 100 in gray, 150 in green, 200 in purple. And so we are still in a long-term uptrend, as defined by the 50-day moving average being above the 150-day and both sloping up, and as well as 200-day moving average sloping up. So we're still in a long-term bull market uh, uptrend. And in terms of short-term, price did close below the 8 SMA in red and the 20 SMA in pink. Um, and so we are starting to show a possible reversal in the short term. However, another indicator I track, which I really recommend, is VWAP anchored to the beginning of each quarter for SPY. This has been a really accurate sentiment tool for me, where it's very simple. If price stays above a VWAP Q, then we consider it to be in a bullish market structure. So no matter what happens with any kind of dips, as long as the market retains above this AVWFQ, we can keep our bias in the short term and medium term to the upside. When it closes below, that is an indicator that market sentiment will be transitioning to more downside pressure. So as of now, price is still above AVWFQ. So as of now, I still am bullish and in the short term. I'll kind of go over some other things that I watch. So I do like to use Fibonacci trend extensions, and I use TradingView's automatic one, which really helps. And so I'm seeing basically here that the market was trading between this range here, 61.8% level, down to the 0% retracement level, which is the base. And we're still kind of in this consolidation range in here. So again, the market has been very difficult to trade lately. It's been going nowhere and chopping around. So, you know, just hang in there basically. If you haven't already, you should be trading more cautiously. You should be trading more lightly. If you have any swing trades, they should not be full positions because you don't have that confidence in here that we're going to make a new all-time high and make a next leg higher like we've seen earlier in October 20, in 2023, where the market just kept going up and up and up, making legs higher. So that's some technical analysis. Um, One more thing I do want to go over. I really like to use Heiken Ashi candles. Um, Heiken Ashi candles really help you uh, analyze the trend and understand what current price trend that you're in. If you're not familiar with it, maybe I can do a video that goes over it. I do have an article that talks about Heiken Ashi candles. I'll post in the description below for you. Um, but just over here, we were in a bullish uptrend starting February 2025 and confirmed on February 14th. So February 13th and 14th, that's when we had this uptrend. We had a Heiken Ashi Doji candle plot on Thursday, which tells you caution, the trend might reverse. And then we almost had a bearish Heiken Ashi candle. I wouldn't call it quite that because it needs to have a flat top and there's a wick here. It needs to look like this. So I don't consider this a bearish trend reversal yet, but it, it could very well happen next week. Let's keep an eye on that. What you want to be looking for if you want to understand, if you see a bearish candle like this, flat top, post on Monday and close like that on the daily, then we have confirmed a trend reversal, which means we'd be going into a downtrend. If we see more dojis, like, this situation here, doji, 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 doesn't matter green or red, then we're going to continue to consolidate. Seeing that we're by the 50-day moving average and AVFQ and that downtrend support line, or the uptrend support line, I have my gut is saying that we're probably going to be consolidating around this level here before we make any further moves. So I don't expect to see heavy selling immediately next week, but if we do, that's definitely a warning sign that we can't ignore. So on the fundamental side, I like to go over a few things. So one thing I like to check is the Fear and Greed Index by CNN. And I'd just like to see where we're at. And we're in fear currently. How I analyze this is if we're in extreme fear, this tends to be a really good buying opportunity. for investments. It's typically the market has gone down enough, individual stocks have gone down with it, and they're at decent prices for you to buy at. Fear tells me that, you know, we're just be cautious in your trading. The opposite goes for extreme greed. When I see extreme greed, I'm gonna exit my swing trades because extreme greed has also coincided with tops. And doesn't mean they're major tops, long-term tops. Even short-term tops before like a 3% drop will also show extreme greed at times. So right now we're in fear, so I'm not going to take any action. The next thing I want to talk about are the economic calendar that we've seen this past week. Let me open that up. So this week, there honestly was not much. We had the FOMC minutes, which just reiterated that, they don't want to cut rates until they see more progress in inflation. And then now Trump's in office and he's pushing out tariffs that will tariffs are going to affect inflation's progress. So just keep that in mind. They still are showing that they want to cut 2 times this year, so that hasn't changed since the beginning of this year. Um, but they're definitely monitoring, and there's uncertainty there. That's why the market's been choppy. There's uncertainty. Besides that, there really isn't much to say about economic reports this week. The last thing I want to talk about with the fundamental analysis is going to be the yield curves. So I like to use the yield curves on Guru Focus. They have the 10-year 1 year and 10-year 2 year. Ignore that pop out. So we were inverted. The yield curves were inverted for a very long time, one of the longest times in American history, from 2022 just until recently, end of 2024. So the yield curve has inverted and uninverted, which is a very accurate predictor of recessions. That is something that I've been looking at and thinking about for a while. Um, Typically, according to some research, market tops or recessions tend to start up to 6 months after the uninversion on the 10-year 2 year and 10-year 1 year, which technically you could say that they uninverted in December, November, December. So maybe by this summer of this year, we could see something. But again, this is not a crystal ball. It's not for sure. It's just probability wise, it's higher than 50% chance of a recession happening because of this. Same thing with the 10-year 1 year. It uninverted in December 2024. And one more I also like to check is the 10-year 3 month, which I use on Fred, which is a Federal Reserve Bank of St. Louis website. That was also uninverted in December 2024. So again, yield curves, when they invert and uninvert, that's a recession indicator. So keep that in mind as well. So if you're wondering why the market's been choppy, why we make an all-time high, sell down to the 50-day, make an all-time high, sell down, it's because we have a lot of uncertainty. We have the yield curves uninverting. That's a recession indicator. We have Trump tariffs, he just announces them and does them. Like there's no warning. So that causes uncertainty. Tariffs affect inflation readings. Inflation readings come out once per month. That also affects uncertainty. So keep that in mind as you're trading and as you're investing. Don't be too aggressive right now. It's not the time. The market's near all-time highs. Not the time to be aggressive. Trade still, no problem. Take lighter trades. If you want to invest, make starter positions. So next I'll go over some stock valuations. So every month I make a list of undervalued and fairly valued stocks I share to my members. So I'm going to go over the ones that are undervalued. So first we have Nvidia, and I'll go over on my website just because it's easier to show the data. So Nvidia is a stock that I believe is undervalued. And let me get you that out right here. I believe that Nvidia's fair value is $150 per share. As of now, it's trading below that. Therefore, basically anytime the stock's below their fair value is considered undervalued, is considered a good price to buy at. Past that, you can use technical analysis, to maybe buy on moving average touches. That's up to you. But I calculate these valuations by several methods, including cash flow models, discounted cash flows, discounted earnings projections, many different ways, and I aggregate them together to get the fair value. Nvidia has a rating of 3 out of 3. It's rated number 2 in the S&P, and I have a bullish outlook on Nvidia. So that's an example of what I look at. So the other stocks, I have Adobe. Adobe's fair value is, let me pull up my Discord so you can see. Adobe has a $450 fair value. AMD is $154, but keep in mind that AMD has a bearish outlook. So bearish outlook on AMD, that means it's in a long-term downtrend. So that means when you want to invest in it, starter position only until you see a reversal to a long-term uptrend. ExxonMobil, undervalued. Um, Target is still undervalued, again with a bearish outlook. And now I see that Intuit has become undervalued with a valuation of $575 per share. For fairly valued stocks, Amazon is currently fairly valued at around $210 a share, Microsoft at $400 a share. We have Google, $169 a share. United Healthcare actually has become undervalued. Uh, on Friday morning, they dropped 11% at the open due to a Department of Justice investigation. If you don't have United Healthcare and you're looking for a defensive dividend stock, United Healthcare is a good choice. It gives a good dividend, and it is the second largest weighted stock in the Dow Jones Index after Goldman Sachs. So a lot of institutions believe in it, they're holding it, and for a good reason. Institutions have access to way more data than we do, way more research, so defer to their judgment for sure. Uh, we have Nike is now fairly valued. Eli and Lilly, I still consider to be fairly valued. Pepsi, Procter and Gamble, and Intuitive Surgical. Again, all these stocks I'm telling you, they have good fundamentals, they have good cash flows, they have good growth projections. They're ranked highly in the S&P 500. They have good economic moats, brand recognition. So do your own research. This is not financial advice, this is my opinion, but this will help you narrow down your search. So I'll go over a portfolio update. This is my current portfolio now. So again, I follow my valuations as well. The stocks I have in my portfolio are stocks that I have in the valuation database. So I try to keep everything pretty balanced between 8 to 10% weighting. So my portfolio consists of Apple, Amazon, Costco, Salesforce, Google, Intuitive Surgical, Eli and Lilly. Eli and Lilly was a position I started when I saw the drop it had from their earnings report. My cost basis is around $770 or so on Eli and Lilly. So I took a starter position when it dropped and added to it as it started to recover above the moving averages. Uh, Meta, I have Microsoft, I have Nvidia, of course. Um, I did start a new position in SCHD. SCHD is a Charles Schwab Dividend Index Fund. It's amazing. It has an average return of 10% per year plus a 3% dividend per year. I mean, it's one of the best index funds out there. If you want a more defensive stock in your portfolio, I highly recommend going with SCHD. United Healthcare, I reduced it luckily before Friday. I believe on Monday or Tuesday this week, it was on Tuesday this week, since Monday was off, I reduced my position to half, so from 8% to 4%, because I just wasn't happy with his performance, and I would rather have that money in SHD. I also have, in the last stock I have is Visa. I did have a large position in Palantir. So this was my portfolio before I adjusted it this week. So I had an 11% position in Palantir. It did not start as that big. It started as a 5% speculation position at $13 a share. But, you know, due to its growth, it has seen amazing growth over the past year and a half. And it's grown to about 11% of our portfolio uh, before I sold it off this week. I did sell a covered call on it and got called away. So I sold a 110 covered call on it when it dropped from the news of the Pentagon getting a budget cut from Trump. And I sold a 110 covered call, closed it on Friday for a 75% profit, and then ended up selling my shares at around $100 per share uh, to completely close out my position for a nice 850% gain on that. Um, Palantir is a good company. It has good value, good fundamentals, good cash flow, good projections. I sold it for two reasons. Number one, it's very overvalued. Its current price does not reflect its current projections. And number two, unfortunately, they've grown in their partnership with Israel to the point where I feel very uncomfortable holding it, as I do not support Israel. However, this is up to you. If you don't care about that stuff, Palantir is considered a good company. Would I invest in it now? No, it's very overvalued. All right. Current trades. So currently, I have trades. Sorry, let me open up my screen. Where is that? I have trades currently in Nvidia. Unfortunately, I had sold put options on Nvidia before their big drop from DeepSeek news, and I have been managing them ever since. Not the funnest place to be, but so far it's been fine. So I had two, let me just turn off the stuff. The red lines are my strikes I have. I have four put options. I have two at a 128 strike expiring next week, and I have two at the 136 strike expiring next week as well. Uh, Before the DeepSeek, this was a 138 strike, and this was a 132 strike, which corresponds to the 50 and 100 day moving averages at that time. When Nvidia dropped, I took advantage as best I could and rolled them down to the 136 and the 128 that you see now, and I've been holding them since. Nvidia's recovery has been nice. It dropped down to the 200 moving average here. It chopped around here, did a stop raid, went below, popped back up, and has recovered very nicely since then. Um, it does have earnings. I don't like to have options expire earnings week, but I had no choice as I wanted to roll my strikes down and get credit for it. And because Nvidia's price was so low, the time I could do that was during earnings week. So unfortunately, I have to have that added risk on. Um, what I think about earnings for Nvidia, obviously we don't know. The implied move is about 6 to 7%, so we could expect a gap down or gap up of 6 to 7% from their earnings. Um, Personally, I think everyone who wanted to sell Nvidia on the DeepSeek news did that, and everyone who wanted to buy Nvidia did that. So the hands have changed enough in Nvidia where I believe unless the earnings call comes out really bad, we're probably not going to see any kind of movement from Nvidia. So that's where I stand on it. We'll see what happens this Wednesday. Um, but yeah, those are my trades for Nvidia. I have put option that I have at the 275 strike, which is at the 200-day moving average, which I sold on this day, February 11th, which expires next week as well. I got like a dollar premium for it, and I'm going to continue holding that. And lastly, I have two put options sold at the 175 strike, which corresponds to the 200 and 150-day moving averages on Google. Um, I typically tend to be more aggressive on my put sells, but again, given how the market's been so choppy and given how there has been a lot of uncertainty, I went very conservative on my trades, with the exception of Nvidia, of course. That was before all this, but I got a low premium on Tesla because I wanted to have that safety net here. If I get assigned at the 200 day, I'd be very happy with Tesla. If I got assigned at the 150 day, 200 day on Google, I'd be very happy. I know I can hold it here. I can sell calls. How do I know? Why would I be happy? Why would I hold it here? Because look at its performance. When it hits the 150 day and the 200 days, even if it goes below it, it tends to bounce and pop back up. A lot of touches here. Just even with all this uncertainty, even with Google selling off hard with the rest of the tech sector bet last year, it still held. So Tesla, same thing. It hits the 200-day moving average, it tends to bounce off. I'm not going to include all this data here. It was in a downtrend, but whenever it's in an uptrend, which it is now in an uptrend, the 200-day provides great support for Tesla. You can see here. I mean, sometimes it won't even touch the 200-day. Even if it goes below it, it tends to chop around it. There's plenty of opportunities to sell calls here and get called away for some profit. So that's the reason why it shows my strike prices. I did use Fibonacci trend extension tool on Tesla to kind of get an idea of where price could head. Um, Fibonacci, I hear two sides of it, that there's good and that they're not good, that they're BS. I personally have seen enough where I like them. I think they're pretty helpful and they're pretty accurate. Tesla, I had this trend extension tool. I plotted this like end of January, and I saw that a potential level it could drop to was a 324 level, which is a 100% retracement, and it did. It did. It bounced right off of that. The next one I see is down here at the 252, but I say that the moving averages take precedence over Fibonacci. Moving averages are going to be the best technical indicators you can use in the market. So the 50-day, the 200-day are the two most used. Whether you make a Robinhood account or an E-Trade account or a Schwab account, they're going to plot those for you by default. Every institution uses them. Every retail trader uses them. And the key with technical indicators is that you want to use the ones that a lot of people use and a lot of institutions use. If a lot of institutions use them, they're the ones who move the market. You can count that they will act when price hits them. So those are my current trades. Um, I can kind of go over trades that I closed. I talked about my Palantir trade that I did, which was profitable. And honestly, I think that was the only trade I really closed this week. Yeah, the market has been so choppy and price has gone nowhere. There's no opportunities to really to do anything. So all my trades are active currently and they're open. And lastly, I'll go over my trade signals. So I'll open my Discord again. I have two channels for buy signals and sell signals. I plot them once a day. They are signals on the daily chart. They are intended to be swing trade signals. They're not intended to be followed blindly. They're intended to be part of your trading checklist. If you wanted it to go long in the stock and you wanted that conviction, then these trade signals will help you with that. So this week started on the 17th, so I'll go to the 17th. So we had a sell signal on Home Depot on February 18th, Viva on February 19th. So let's take a look at how they've been doing so far. I'll turn on my trade signals. I'll turn off everything else so they're very clear. I'll even turn off my drawings. Okay, so let's go to Home Depot. Here's a sell signal that was plotted on Home Depot on February 18th. As you can see, Ever since that day, you've been in profit. If you held it for the end of this week, you would have been up 4% on that short trade. The other one we had was Vivo on the 19th. Again, this signal turned out to be successful as well, being up a 1.5% just in a couple days in profit on the short trade. Other sell signals we had Palantir, Meta, and Broadcom. Let's check those out. So Palantir, and keep in mind as well, these trade signals are swing, okay? So at minimum 1 day, up to 2 weeks. So I'm going to be covering some signals from 2 weeks ago as well to see how they end up doing. So what do we say, Palantir? Here's Palantir. Technically, the sell signal worked out. If you went short on the end of this day here and you held it to the next day, you would have been up 4% on that short trade. We also had Meta. Let's go to Meta. Same thing. Signal worked out very nicely. Broadcom. Signal worked out very nicely. Again, I will say I got kind of lucky. Not lucky, but the odds were in our favor on these short trades because the market has sold off and has been weak. So keep that in mind too. That's why it's so important to analyze the market first, because you get your sentiment there, and then based off that market sentiment, you can take your trades accordingly. We've been in a choppy and cautious market, so in my opinion, longs or shorts are on the table. Looks like on Friday, we had a lot, of course, on Friday we're going to have a lot of sell signals because the market sold off so hard. These ones I can't really cover because these would be considered day trades, and these signals are not successful day trades. They're for swing trades. So I won't go over these, but next week on my video, I'll go over how these all turned out. Buy signals, let's go over these as well. Obviously, there's going to be a lot less buy signals, right, this week because of the market price action, which gives me more confidence in my trade signals because if I had a lot of buy signals this week, that would make me look bad, right? So another way you can even look at sentiment is how many buy and sell signals came out. There were way more sell signals this week than buy signals. So you could have a more bearish sentiment on your trades. So we had a Nike buy signal on February 18th. Let's check out Nike. Looks like this one didn't work out. You could have been profitable if you wanted to take advantage of this wake opportunity on Friday. But even if you held it, your maximum loss would be 1.5%. If you are obviously taking multiple trades, not every single trade is going to be a winner. Um, the short trades that if you did take them on my sell signals would have way more than made up for any losses you had on this buy signal on Nike. Let's check out AMD. Yeah, because of the selling on Friday, but it was profitable the next day if you wanted to sell it. Even the day after, you would have been break even, slightly profitable on them. Hopefully, if you're taking swing trades, you're monitoring the market every day. If you start seeing SPY start selling off, you do not want to wait till the end of the day to get out of it. I'm sure if I go to the 5-minute chart on AMD, you have a lot of opportunities to get out before the end of the day. So if you started seeing this kind of price action taking out the low of the previous day on the 5-minute, you could maybe get it out at 112. Buy signals on Friday. We had three. Believe it or not, we had three buy signals on Friday. Apple, Microsoft, and Pepsi. Can't go over the results of these, but just to show you, Apple, buy signal, slightly profitable, break even on that so far. Microsoft, obviously this one did not work out. That would have been a loss. That buy signal did not work out. And Pepsi. Pepsi would have been a beautiful trade. I mean, wow, I didn't even catch that. 3% up on Pepsi the following day. Those were all the signals I plotted this week. I mean, as you can see, more winners than losers. No trade signal is going to be perfect. Not every single trade signal is going to work out nicely, but I am confident that if you have your own checklist for your trades and you add this signal on top of it, it'll make you a lot more profitable. You'll be way more confident on your trades and it'll filter out trades that you shouldn't be taking. I don't know how much time I've been going on, but screw it, let's go over last week's too. So we'll go on the week of February 10th to 14th. So let's go ahead and go on the buy signals first. 10th to 14th. So we have buy signals on Nvidia and Home Depot on February 11th, and then SPY and Qs on February 11th. Those were the only buy signals that popped up last week. Let's take a look at them. Nvidia and Home Depot. This was a buy signal. At first, it was not profitable. Again, this is up to 2 weeks. So eventually, this would have been profitable. Even if you held until a sell-off today, at the end of the day, you still would have been profitable on this trade. If you took it at the end, the candle close of the day that the signal came on, which I do try to post the signals near the end of the day. That way I have confidence that the signals will be confirmed, most likely. So Nvidia was a profitable one. Home Depot. Let's check out Home Depot. Where are you? Home Depot was not a profitable trade. That was unfortunate to see a gap down like that on Home Depot. That would have been a minus 2% trade on there. If you decided, I would obviously you should not be holding it like if that happens. But if you decided to hold it, you could have gotten out profitable. But again, that's up to you. Maybe your trading style would have you hold it there, seeing a bullish hammer on Home Depot and it dropping near the bottom of this consolidation range. That's totally fair. It's up to you. Everyone's different. I'm a bit of a conservative trader. I would probably let it close it there. And then finally, SPY and QQQ. Let's go on SPY. Buy signal here. Would have been profitable anytime before this drop. QQQ, same thing. So those are my trade signals. I'll try to keep posting them, the results of them every week. This is it's for myself as well to be more confident in my own trade signals I released last year, and for you too, to understand how I would use them and to understand how they look like on the chart and how you could incorporate them into your trading style. So I think that's all I got for you. I guess I'll end with like a look ahead on the market. One thing I do like to always refer to is going to be the market seasonality, which I have pinned on my Discord. This is a seasonality. Maybe it's a bit too small, but hopefully you can see it. End of February tends to have a sell-off into March. And by the end of March, the market should recover and go into an uptrend until May. So March and April tend to be more end of March to all of April tends to be bullish. February tends to be bullish up to midway and then sell off towards the end of February into middle of March. So keep that in mind. Another reason to be cautious, another reason to have a bit of a bearish bias on this next week with the uncertainty on inflation, uncertainty on tariffs. We have the market sell off on Friday. We have price right at the 50 SMA and AVWAP. Those are very key levels. And we have seasonality showing that the market is going to sell off further. Be cautious. Don't be aggressive. It's not the time. If you want to invest, you're going to have opportunities, of course, to invest in. Maybe in March we'll have a further sell off. And I'll also go over any economic events for next week. Pretty much nothing. So no news events next week. That is kind of good if you're bullish because you don't want to see any kind of catalyst that will further cause the market to sell off. So I guess if you wanted to pay attention to one, it could be next Friday on the personal spending. Personal spending is important because the feds have a dual mandate, bring inflation down while keeping the labor market strong. An indication of labor market is personal spending. So right now they're forecasting to drop from 0.7% to 0.2%. So they're already expecting a drop. Hopefully we don't get a larger than expected drop. That's how I'd be looking at it. If you watched the whole video, thank you. I really appreciate it. I'm open to feedback. This is my first video for this channel. So if you have any feedback, if you want to drop a comment, go ahead. If you have questions for me, please drop a comment below too. If you liked it, I'd appreciate a subscribe or like. I'll try to post these every week. And in the description, I'll post a link to my Discord and my website. They're free to use, they're free to join, no credit card or anything like that. I'm trying to build a community here, so I'd appreciate to get some more people in here and more, whether you're experienced or not, new or old, I guess, investor trader. Please feel free to join and we can all learn together. Um, so yeah, thanks for watching. Have a good week. Have a good weekend.